Let's continue that conversation with Economist Miyelani Maluleke, whom you saw in that report. A very good evening to you, Mr. Maluleke, and thank you so much for speaking to us. So I'd like to hear your views on this. It's been about 15 years since load shedding started in the country, and over the years the problem has deteriorated. Is this the worst that the manufacturing sector has faced to date?
Well, I mean, if you look at the amount of load shedding that we've seen, not just in September, but I think the third quarter overall, so from July to September, it's actually one of the worst quarters of load shedding that we've actually ever seen, in the entire 15 years of load shedding that you're talking about. And, figures such as the Absa PMI, but, even more data that we're seeing are definitely showing the impact of this devastating power cuts on the economy. Is really quite severe. We've already seen in the second quarter of this year already that the load shedding that we saw then, combined of course with the floods, resulted in our GDP declining in that quarter. Now the big question is, are we going to see another GDP contraction in the third quarter? We don't have enough data yet, I think, to sort of make a really good determination on that. But some of the figures that are coming out, such as the Absa PMI, are certainly not very encouraging here.
If you could just reflect a little bit on the figures, what they show, particularly for the sector.
Right. So I think just to remind listeners a little bit, what the PMI is. It's just a survey that we send out, from the middle of the month, toward the latter part of the month, to get a sense of what's going on in the sector from a production perspective, new sales orders perspective, jobs perspective. And the reason we do this is because the official figures, the official economic figures from Stats SA tend to come with a lag. Just as I was saying a few minutes ago, we only at this stage have the second quarter GDP data. We're only going to see the third quarter GDP data in December sometime. We're only going to see the September manufacturing output data in November sometime. So the official numbers take a long lag to be released, but figures such as the PMI give us a quick early indication of what is actually going on in the economy, what some of the issues that we're seeing in the economy are actually affecting the different parts of the economy. And of course, how we interpret this PMI is that figures above 50 are seen as expansionary. They're good. They signal that the sector is growing, but figures below 50 tell us that activity in the sector is actually contracting. And what we're seeing in September specifically is the Absa PMI falling below 50, which signals that given the challenges that we experienced in September, there was a contraction in activity. And where you really see this is in the business activity sub-index, which really does show a big drop when we compare with August. That actually came to about 38, in September. That's a big drop and far away from that 50-point neutrality level that we're talking about. But I think that even beyond the issue of load shedding, there is something else here that manufacturers are telling us about that I think will also be interesting to watch in the months ahead. And that is, they're starting to see demand conditions softening a bit. You've spoken about this environment where interest rates are going higher. That's putting a lot of pressure on consumers. But we're also starting to see now that this challenging global backdrop is starting to have some feed-through effects into South Africa, and we see this in export performance, which has actually started to drop as well.
So let me ask you about this, the impact on manufacturing's ability to attract future investments as a result of this. And of course, over and above the potential loss of stock, how is the constant switching on and off of machines, impacting businesses? Does it add unforeseen costly expenses because of damage?
In a really big way, I was actually recently talking to a manufacturer in the in the food space. I'm not going to mention them by name, and they mentioned to me that when load shedding hits you, especially when you're not expecting it, it's not that you stop production, but when you're in food manufacturing, you sometimes have a lot of stuff that is actually running through the machines, and when electricity comes back, you don't just switch on the machines and then off you go, you start producing again. The stuff that's sitting in your machines is not usable. You have to clean those machines, you have to get that stuff out. So it's waste of material, it's waste of time. So you're absolutely correct. It imposes a really big cost, for manufacturers. And we believe it's mostly the smaller scale manufacturers, the medium-sized manufacturers who don't really have, the resources to invest in big backup generation capacity. And of course, as you also point out, I think this is really important. What we're seeing in the PMI is the short-term impact of load shedding. What is the impact in September? The other really big question, of course, is what is the longer-term impact? And that, I think, really speaks to the investment that we're seeing in the sector. And in that space, when you look at business confidence in the manufacturing sector has been very low for a very long time. And that is certainly, unfortunately, translating into very weak investment outcomes. And I think that this persistent sort of lack of adequate electricity supply has been a big challenge for businesses for a very long time.
All right. Thank you so much for speaking to us, Economist Miyelani Maluleke, on the latest PMI figures from Absa.